Assalamualaikum and hi. My name is BATRISYIA binti HANIF.
My name is HASBULLAH bin HADIN.
My name is Najihah Husna binti MOHAMED NADZIR.
My name is Muhammad IZZUDDin bin Muhammad HILMI.
My name is NURFARAH binti AHMAD FAIZAL.
Assalamualaikum you all. Good afternoon semua. So today we are going to learn a new topic about capital budgeting.
Sir, what is capital budgeting?
Good question Faradini. Everyone, please open past year February 2022.
Basically, the question talked about acquiring a new machine in a herbalic stadium berhad, and here are the important information extracted from the question. Now that we understand the question, let's start the calculation step by step.
First of all, we are going to calculate the initial outlay, where we are going to calculate the cost of new asset that purchased by Herbalic Stadium Berhad. So the cost of new asset, 400,000 ringgit, will be added with installation and delivery charges amounted 25,000 ringgit. Next, we are going to deduct by 25,000 ringgit, which amount of increase in account payable. At 35,000 ringgit, the amount of increase in inventory, deduct with 150,000 ringgit the amount of sales proceed of existing machine. And lastly, we are going to deduct with amount of 8,160 ringgit, which amount of tax saving, and we will get the initial outlay amounting 276,840 ringgit. Before we begin to calculate differential cash flow, we have to calculate the old and new machines depreciation. So let's start with the calculation of Herbalic Stadium Berhad old assets depreciation. We are going to determine the cost of old asset, the salvage value, and its useful life. The cost of old asset is 300,000 ringgit. The salvage value is 10,000 ringgit and 10 years of useful life. So let's use all of the information above and calculate the depreciation of old asset. 300,000 ringgit will minus with the salvage value 10,000 ringgit divide by 10 years of useful life and multiply with 4 years, since the old asset was bought 4 years ago and the accumulated depreciation of old asset of old machine is 116,000 ringgit. Next, the question said that they sold it for 150,000 ringgit, and we are going to determine whether is there any gain or loss of disposal. So the carrying amount will be the cost minus with accumulated depreciation, where 300,000 ringgit will minus with 116,000 ringgit, and the carrying amount is 184,000 ringgit. As we can see here, there is loss of disposal since the carrying amount of the old asset is greater than value of the old asset. We will get loss of 34,000 ringgit. And whenever we got loss on disposal, there will be tax saving, and the tax saving is 8,160 ringgit, where we take the amount of loss multiply with the tax rate, 24%. Next, we are going to calculate depreciation of new assets that acquired by Herbalic Stadium Berhad. The cost is given 400,000 ringgit, the salvage value is 20,000 ringgit, delivery and installation cost 25,000 ringgit, and 6 years of useful life. So the calculation of depreciation of new assets will be 400,000 ringgit plus 25,000 ringgit the delivery and installation cost, and we deduct with the salvage value 25,000 ringgit and divide with 6 years of useful life equals to 67,500 ringgit. Next, we are going to determine whether is there an increase in depreciation. We are going to compare the depreciation of old asset and new asset. The depreciation of old asset is 29,000 ringgit, which the 300,000 ringgit minus with salvage value and divide with 10 years of useful life. The depreciation of new asset is 67,500 ringgit. We calculate previously, and there is increase in depreciation of 38,500 ringgit. We move on to the calculation of differential cash flow. Herbalic Stadium Berhad have 2 periods of year, whereby the first year until the 5th year and the 6th year. Each year's production increased by 65,000 ringgit on 1st until 5th year and 100,000 ringgit on the 6th year. Next, we will add the reduction of operating costs, 15,000 ringgit each period. Next, we deduct the amount of increase in depreciation, 38,500 ringgit, earning before tax, 41,500 ringgit for the first year until the 5th year, and 76,500 ringgit on the 6th year. We will deduct with 35% of tax, 9,960 ringgit for the first period, 18,360 ringgit for the second period, and we will get the earning after tax for each period, 31,540 ringgit and 58,140 ringgit. We will add back the increase in depreciation that we got from the previous calculation of depreciation, 38,500 ringgit, and lastly, we will get the after tax differential cash flow, 60,040 ringgit for the first year until 5th year, and 96,640 ringgit for the 6th year. Next, we are going to calculate the terminal cash flow. First of all, we are going to take the salvage value, 20,000 ringgit, plus with increase in inventory, 35,000 ringgit, and deduct with the amount of increase in account payable, 25,000 ringgit. And we will get the terminal cash flow for 30,000 ringgit.
Okay, next, the question asks us to calculate the net present value NPV calculation for the project using a 10% discount rate, which represents the company's cost of capital. The first step is, at year 0, the project requires an initial investment of 276,840. Since this cost occurs immediately, no discounting is needed and the present value will remain the same. The next step, at the years 1 to 5, the project generates an annual after-tax differential cash inflow of 70040. These cash inflows are discounted using PVIFA at 10%, which is 3.7908 and gives a present value of 265,507.63. Next step, in year 6, the project generates an after-tax differential cash flow of 126640, which includes the terminal cash flow. This amount is discounted using the PVIF at 10%, which is 0.5645, resulting in a present value of 71488.28. The last step is to calculate the NPV. We sum up all the present values of the future cash inflows, and the final net present value is 60,155,000.91. This slide shows the internal rate of return IRR calculation for the project. The IRR is the discount rate that makes the NPV equal to 0. In practice, we estimate IRR by testing two discount rates, which is one that gives a positive NPV and the other one gives a negative NPV. So the first step, we start with 10%, which is the company's cost of capital. Initial investment at year 0 is 276,840. Discounting all the future cash flows at 10% will give a positive NPV of 60,155 and 91 cents. This indicates that at 10%, the project generates returns above the required rate. The next step, since the NPV at 10% is positive, we increase the discount rate to 18% in order to obtain a negative NPV. So at 18%, the present value of future cash inflows decreases. It resulting NPV become net negative 10,903 and 45 cents. This shows that 18% is too high for the project because the NPV is positive at 10% and negative at 18%. The IRR must lie between 10% and 18%. Therefore, we applying a formula. Then the final answer for IRR is calculated at 16.77%. Moving on to the next question, the question asks us to calculate the payback period. So the formula of the payback period is initial outlay divided by annual cash flow, and then we calculating using the formula, and the final answer is 3.95 years. And the question asks us to advise the company whether they should replace the new machine or not. So the answer is the company should replace new machine because the payback period is more than desired payback period, which is 3.95 is large or more than 3. The net present value is positive, and the internal rate of return of 16.77% is higher than the cost of capital of 10%.
Here are the important information given for a project that is being considered by Mentari Sendian Berhad. For the next question, it requires the calculation of sensitivity margin, initial investment, variable cost, and sales. But before we can do that, we need to find the NPV and the present value of variable cost, sales, and investment. It is given in the question project cost and initial of 35,000, meaning that we need to put negative 35,000 on period 0. We will also need to put cash flow of 36,000 for both of the period 1 and 2 because the project sales is 36,000 per annum for the first 2 years. Since the anticipated variable cost will be 3,000 annually, we need to put negative 3,000 on both period 1 and 2. When we sum it up, we will get total cash flow of negative 35,000 and 33,000 for period 0, 1, and 2. For the discount rate, we can either look at the table of PVIF or just calculate it using calculator. So the discount rate will be 1 for period 0, 0.8929 for period 1, and 0.7972 for period 2. Please remember that the cost of capital is 12%, meaning that you need to use a discount rate of 12% for each period. We need to multiply the discount rate by the total cash flow of each period, and we will get present value cash flow of negative 35,000 for period 0, 29,465.70 cents for period 1, and 26,307.60 cents for period 2. When we sum it out, we will get net present value of 20,773.30 cents. Next, for the computation of present value for variable cost, we only need 2 periods, which is period 1 and 2, and we need to take variable cost of 3,000 and multiply it by the discount rate, and we will get total of 2,678.70 cents and 2,391.60 cents. And when we sum it up, we will get 5,070.30 cents for the present value of variable cost. Moving on to the computation of present value for sales and investment. Again, we need only 2 periods, which is period 1 and 2, and we take the sales of 36,000 for both periods and multiply it by discount rate of 12%. And we will get a total of present value of sales of 60,843.60 cents. Lastly, for the present value of investment, we just have to take 35,000 and you don't have to multiply it with the discount rate.
Alright, now let's look at working 3, which is the sensitivity margin. Sensitivity margin helps us understand how much a key variable can change before the project's NPV becomes 0. Please remember that the higher sensitivity margin will lead to the lower risk. Okay, so now let's start with the initial investment. For initial investment, we calculate NPV divided by the present value of the initial investment, which is 20,773.30 divided by 35,000, which giving us 59.35%. This means is that the initial investment could increase by up to 59.335% before the NPV becomes zero. This shows that the project is reasonably tolerant of increases in initial costs. Therefore, the project is not highly sensitive to changes in initial investment. Next, let's move on to variable costs. For variable costs, we take NPV divided by the present value of variable costs, which is 20,773.50 divided by 5,070.30, which resulting in a sensitivity margin of 409.71%. This means that variable costs would need to increase by 409.71% before the NPV turns negative. I would say this tells us the project is very strong in terms of cost control and is least sensitive to variable cost changes. Even a significant increases in variable costs are unlikely to threaten the project's profitability. Finally, let's look at sales. For sales, we calculate NPV divided by the present value of sales, which is 20,773.30 divided by 60,843.60, giving us 34.14%. This tells us that sales could only fall by 34.14% before the NPV becomes zero. Because this is the lowest sensitivity margins, it indicates that the project is most sensitive to changes in sales. A decline in sales volume or selling price would have a major impact on the project's profitability. Overall, the project is most sensitive to sales, moderately sensitive to initial investment, and least sensitive to variable costs. Therefore, management should focus on maintaining sales performance as this is the key risk area that could affect the project to fail.
Firstly, sensitivity analysis is based on historical data and management assumptions. Historical data may not accurately represent the future conditions, especially in a changing business environment where consumer preferences, technology, regulations, or economic conditions can shift. Management assumptions may also be subjective or biased, as they depend on judgment rather than certainty. If the assumptions are overly optimistic or pessimistic, the result of sensitivity analysis may mislead decision maker and give a false sense of accuracy. Secondly, sensitivity analysis assumes that other factors do not change and considers each variable individually. In reality, business variables are often interrelated. For example, an increase in selling price may affect demand or higher costs may influence production volume. By changing one variable at the same time while holding others constant, sensitivity analysis ignores the combined or interactive effects of multiple variables changing simultaneously. This oversimplifies real-world situations and may underestimate the actual risk involved. I'm going to talk about meaning of MSME in the article and in general. So in general, MSME means micro, small and medium enterprises. They are business entities that operate on a small scale compared to large corporations in Malaysia. They are classified based on criteria such as sales turnover and number of employees. MSME plays a crucial role in economic development as they contribute significantly to employment generation, income creation and innovation in an organization. They serve as a backbone of many economies by supporting, promoting and enterprising local industries such as small shops, service providers and local manufacturers. As the meaning of MSME stated in the article, the introduction emphasized that micro, small and medium enterprises are the backbone of both developed and developing economies. The article highlights their importance by noting that MSME account for about 90% of businesses worldwide, generate more than half of the global employment. The article used Najihah as their case of study to demonstrate how MSME control the business environment, contributing for about half of the country's GDP and providing employment for a large proportion of the population.
Next, I will explain the research objectives of the study. The main purpose of the study was to examine how the adoption of investment appraisal techniques can improve the effectiveness of micro, small and medium enterprises or MSME. The researchers were particularly interested in understanding the decision-making behavior of MSME owners and managers. The first research objective was to examine whether the MSME use investment appraisal techniques and the extent to which they use them in making investment decisions. This objective focuses on actual practice, in other words, whether MSME managers apply formal methods such as payback period, net present value, internal rate of return, and profitability index when deciding whether to invest in real assets. The second research objective was to determine the level of awareness of investment appraisal techniques among MSME. This objective recognizes that awareness is a key factor influencing adoption. If managers are not aware of these techniques or do not understand them, they are unlikely to use them effectively in their businesses. The third research objective was to examine whether there is a significant relationship between the use of investment appraisal techniques and the quality of investment decisions made by MSME. This objective aims to assess whether the application of analytical and rational decision-making tools are actually leads to better decision outcomes.
So today, we're going to talk about problems that we can find in this article. The first problem that addressed in this article is inefficient investment decision-making by MSME, particularly when invest in a long-term physical asset. Although investment techniques are designed to help business assess their investment, whether it's worthwhile, however, many MSME fail to apply them properly or consistently. This is serious issues because studies shows that poor investment decisions are primary cause of business failure in Nigeria and also across Africa. For instance, they found that business neglecting investment decision-making practice are more prone to financial difficulties and business failure. Likewise, Faragher emphasized that small firms need to have more accurate and reliable capital budgeting in order to grow and also remain competitive. Yet, the persistent failure to adopt a proper appraisal techniques highlights that inefficiency investment decision-making are still a major problem of MSME. As a result, many MSME fails not because lack of opportunity, but because of poor investment decision. The second problem discussed in this article is a low-level awareness of investment appraisal technique among MSME managers, which limits their adoptions and practical utilization. Although capital budgeting techniques is important to make a strategic investment decision, there is no clear agreement in these studies whether the MSME actually use this technique, because the previous research presents that a conflict findings on the use of investment appraisal technique by MSME. For example, they found that small-scale firms use this appraisal investment technique. However, Olawale reported that small manufacturing firms do not apply this cultured investment appraisal technique in evaluating their investment project. This lack of consistency creates the uncertainty about the true level of adoption of investment appraisal techniques among MSME. These studies found that overall awareness about investment appraisal technique among MSME manager is low. This contradicts their findings, who reported that SME operators had a significant knowledge on basic appraisal techniques. To further explain this disagreement, Crystal Wali's test revealed that there is a significant differences of level awareness among MSME managers, with managers of medium-scale enterprise showing the higher level of awareness than those micro-scale businesses. Consequently, this variation in awareness helps to explain that the inconsistency of adoptions in these investment appraisal methods across MSME. To sum up, this explains why studies disagree on whether MSME use appraisal techniques, because there is a huge differences of level awareness among MSME managers.
Moving on to the findings of the study. Firstly, the study found that MSMEs do adopt some investment appraisal techniques, but the level of usage is generally low and inconsistent. Most MSME owners and managers use these techniques only occasionally rather than regularly. This indicates that appraisal techniques are not yet fully integrated into the decision-making process of many MSME. Instead, managers often rely on personal experience, intuition, or informal judgment when evaluating investment opportunities. Secondly, the study revealed that the level of awareness of investment appraisal techniques among MSMEs is generally low. Many MSME operators have limited knowledge of formal appraisal methods, which explains their low level of usage. However, the study also found that awareness levels vary among different categories of MSME. Medium-sized enterprises tend to have higher awareness compared to micro and small enterprises, suggesting that the firm size and managerial exposure influence knowledge levels. Thirdly, and the most importantly, the study established that there is a significant and positive relationship between the use of investment appraisal techniques and the quality of investment decisions. MSMEs that apply appraisal techniques, particularly the accounting rate of return and the profitability index, are more likely to make a better quality investment decisions. This means that analytical decision making improves accuracy, reduces risk, and enhances business performance.
Furthermore, I will explain about the recommendations stated in this article. The first recommendation is developing the skills of MSME owners and managers through business support services such as training, consulting, technical advice, marketing support, and infrastructure. In addition, the government should encourage MSMEs to use these services by offering incentives to match their needs with suitable providers and setting clear guidelines. Secondly, the government should stimulate collaborations between large companies, including multinational companies, or as known as the MNCs, and MSMEs. This partnership can involve research, development, and resource sharing and help MSMEs gain exposure to modern business practices and global market trends. Lastly, universities should work more closely with MSMEs to help improve their management and business knowledge. Tertiary Education Trust Fund should support universities financially so they can set up industry partnership units that provide practical support and advisory services to nearby MSMEs.
In summary, throughout all of the findings, problems from this study, our research in improving the effectiveness of MSME through the adoption of appraisal technique and recommendations that we suggest, we should realize and see that it is very important to the economic growth. Many of MSME owners are struggle because investment decisions are often made without proper analysis. This is where appraisal techniques play their roles on improving a better quality in investment decision. Overall, it is all about the awareness we want to spread that appraisal techniques plays a crucial role in making investment decision. For example, it will encourage partnership between large firms and MSME owners. Our future MSME owner could become a better investor if we start to improve the effectiveness of MSME through the adoption of our study, the appraisal technique.